Here again with Smart System. In our last lesson, we began a new series on market movements caused by economic releases, with a look at the headline GDP number. In today's lesson, we're gonna dig deeper into GDP with a look at the major components that make up the number, and why these are important to traders. So let's get started. In addition to looking at the growth, or lack thereof in the overall GDP number, traders will also look at the growth or lack thereof in the components that make up the number. As GDP represents the value of everything in an economy, you can imagine the amount of data that goes into compiling the number. And the neat thing here is, much of the data which goes into it is published for the market participants to view. By looking in and digging down into all this data, and looking at the different pieces which make up GDP, traders get a good picture of what's happening, not only with the overall economy, but with all the different components of the economy. And this is what's gonna be reported on by the major press. The Wall Street Journal and Investors Business Daily, Bloomberg and places like that. Now we could spend many lessons going over all the data that's in this report, the goal here. However, I don't think too many people are gonna be digging through that report themselves. So the goal here is able to understand what's going on from a broad sense. And the way to do that is to have a framework for understanding the major components, so we as traders can understand what's going on from a broad sense. When the market reacts to certain pieces of the report, the broad categories, which it's important to have an understanding of here, are number one, personal consumption expenditures. The important thing to understand here is, over 65% of the US economy is made up of these categories, made up of personal consumption expenditures. So what the individual consumer is doing, either growth or lack thereof and their consumption, as well as what goods and services they're spending money on, is heavily focused on. Number two is private investment, and this includes purchases of things such as computers and equipment, which are known as fixed assets by businesses, and purchases of homes, and also purchases of inventories or goods that businesses sell. These are all obviously important things, as how much businesses are investing is a good indication of how they feel about future growth prospects. And how much growth the housing market is experiencing is obviously an important component of the economy as well. The third category here, this includes pretty much everything the government spends money on, besides social programs. So the important thing to understand here is, one thing that's probably going to come up a lot is, the government spends a third of the government's contribution to GDP. This category is on defense spending. So people are going to watch that, especially people who are following, the defense industry and the companies that service. The fourth is net exports. And this is an important number, which shows how wide the gap is between how much the US exports and how much it imports, and can obviously see the ramifications of that number would have. So what the GDP number is going to give you a feel for is how much each of the above grew for the quarter, and what their overall contribution to the economy was. The above numbers will then be broken down into more detailed numbers, which will go into compiling the final number for the above four categories. As I discussed the beginning of the lesson, you can dig much deeper into these numbers. You gotta feel what's happening in the overall economy, but you don't really have to do that. Luckily, this number is heavily reported on, so the major publications are gonna point out what the major changes were in those types of things, or the summaries that come out just after the numbers released are gonna highlight what's important and what change and what the markets focus on. And for those who do want to dig through, it'll be pretty obvious before the number what would be a market moving event. If the market's really focused on housing or something with the inventories or something like that, where exactly you would look in the report to see if that's going to be a market moving event. So now you have a broad understanding of these categories. You should be better equipped to quickly gain an understanding what the market's focused on when it's released in a report. So you will also find, after following the GDP releases, the market is going to be focused on different things depending on what's happening in the economy at the time, and to help better understand what's going on in the markets after the GDP is released in real time. That's our lesson for today. And next lesson, we're going to look at several more economic numbers that lead the GDP number and help market participants predict how much growth the economy has experienced before GDP is released. So we hope to see you in that lesson. As always, if you have any questions or comments, please feel free to leave them in the comment section. And good luck with your trading. Have a great day.